Here we had just a huge down close week, and like the thing about this down close week is most of it happened Wednesday after market with Trump speaking, and then Thursday, and then Friday. So this really wasn't like, oh, it was the easiest tradable. I got the weekly range high to the weekly range low. No, there was some manual intervention, and then after that intervention, you could then get aligned with that. But as we see, just huge down close week, 2,600 points. That's insane. 2,600 points, 13% here on NQ, and we're trading into this weekly buy side imbalance, sell side inefficiency, and also with this kind of wiki low here, August low that we trade into here. So we also have this kind of low here, and then we have this imbalance, and then this imbalance here. Just by the looks at this, for me on the higher time frame chart, I just kind of want to chillax for the next like maybe week, because we just had so much volatility. Every session has been like very volatile. There's been a setup pretty much every session, and I know that's probably not going to last. It's probably not always going to be like this, but with this volatility going on, there's a lot of sentiment, there's a lot of fear in the market right now. So therefore, us as traders, especially scalpers, are able to capitalize off that. So just by looks at this, still bearish, nothing bullish at all about this chart. I want to see continuation lower until proven otherwise. As you see on the daily chart, Monday opens up. We have this candle in here trading into this sell side, trading back up higher. Tuesday, we get a continuation into the sell side imbalance. This is a 1 hour SIBI. I was really looking at this. If you guys see my daily reviews in the week, this is kind of my draw on liquidity. And then we get into here, this inefficient price action. Notice here how we have a volume imbalance, no wick at all. That's an actual gap. And then we have a volume imbalance here. So it's likely going to want to redeliver back into this before, if we do want to trade lower. And that's exactly what we got here. Wicking into that. And then we have a volume imbalance here. And then this candle opens up, and then just straight distribution all day Friday. And trading into this wick here. This was ICT's target. He was looking for constant encroachment. We slammed lower into the lower quadrant of that, and now we're about at that low, which is where sell side liquidity rests. And here we have this low that I'm looking at, and then you also have a very smaller inefficiency here, and then you have this volume imbalance here, which is an actual gap there as well. So just by the looks at this, we've just expanded. So what are we probably going to do? We're either going to consolidate or retrace. Obviously, I want to see this sell side get hit first, but we could have a potential trade back up into a 1 hour SIBI, something like that. I'll be looking for that on Monday, but I don't want to forecast that altogether. So I just want to go into the weekly profile here on NQ. For me, I'm just looking for 1 hour inefficiencies. 1 hour inefficiencies traded to during time, and then that's likely going to provide a nice expansion move, a tradable expansion move. And let's just study what happened here. So Monday, we're opening in a discount. This is a volume imbalance on the weekly chart on NQM. We trade into that, and then we get expansion back up into new week opening gap. We had some clean relative equal highs. Monday, just beautiful price action, and then Tuesday we had 10 a.m. news, I believe, and then we trade lower, Asia low, sell side trade back up into this inefficiency here. And this is really what I was looking at, and it's also the daily SIBI constant encroachment as well. And then you have a 1 hour SIBI high. That's another premium target for the algorithm. And then we trade up, SIBI, come back down into this buy side imbalance, including this volume imbalance. We're trading back down into this candle, and then we expand higher. I didn't mark this buy side imbalance. We'll use it as inversion here. We're balancing that out. We have buy side delivery, sell side delivery, and we reclaim it again as buy side right there. And notice here, this was a nice expansion move at 9:30. We just get that immediate expansion higher, leaving what relative equal lows in this 1 hour buy side imbalance. Trade up higher, and then this is PM session trades off that, and then Trump obviously trades into the new week opening gap volume imbalance. Right there was also another new day opening gap. This isn't really, I mean, yes, you kind of could trade it, but no, it not realistically. And then here we have Wednesday. After we just had this huge manipulation, we trade back up, and this is just beautiful delivery here. What are we looking for? 1 hour by 1 hour inefficiencies to give us the weekly range kind of. And here we have this inversion fair value gap trading right up into that. Look at the wicks. This is happening during London. And then we expand lower, sell side imbalance. That's your New York setup. And then we're trading lower, hitting this during lunch, inversion. And then continuing lower, IOFED. And then here we have this imbalance. Notice how this imbalance gets originally disrespected. What time is it? It's 1 a.m. What are we waiting for? London, 2 to 5. We trade into it and use it during London. And then pre-market, we're failing to trade above that. And then what else do we have here? We have a buy side imbalance on the 1 hour chart. Balanced price range here. Using that immediate expansion, we're super bearish. We have lower targets. And then we have this huge 1 hour inefficiency that we fail to trade to constant encroachment and then just stay heavy and then kind of just failing to create an inefficiency here. This is kind of, I kind of wish we did create an inefficiency as we hit liquidity. What I mean by that is just because we're so close here, I kind of wish we had like a 1 hour inefficiency. Like, yes, we do have like this 15-minute imbalance. That's nice. But I kind of wish there was a 1 hour because then that would kind of constitute a setup, probably just trading here, back up into here for possibly another expansion. So that beautiful, or not beautiful week, a lot of setups, but also kind of like manual intervention and then just following that intervention. I want to look at ES here real quick. ES pretty much the same thing. ES has this 1 hour imbalance, trading up, using that here. Look at all the wicks into that. Notice how much time we spent in this 1 hour buy side imbalance. Manual intervention, trading up higher, stopping out all these long traders. Almost came up to this high. If we came up to this high, that would have been nice. Trading lower, you have a volume imbalance here. Trading back up, failing to reach this wick. Trading lower, sell side imbalance, and then just heavy price action. ES and YM were a little bit heavier. NQ was a little bit weaker, or a little bit stronger in its delivery, but not much. I mean, all three are moving together. ES has already hit this August low, which is kind of what I'm trying to say. ES has already hit that, and then YM has already hit that as well, and NQ is yet to fill into that. What I do want to pull up here is I want to pull up in my Discord. I have some like I'm gonna start doing this every week, where it's just kind of just it's eye training, just where is every single setup, because there was a lot of setups this week, and kind of just okay, this is hypothetical entry, hypothetical add, and then sell. So I'll go over that in a minute here, but I kind of want to just get into a little bit more like of this weekly profile and kind of just break it down a little bit more on the 15-minute chart. So Monday was really nice. We created these very clean relative equal highs, like just beautiful. London, we didn't really do anything. We're just consolidating. What do we have? We're in a discount market. New week opening gap exists above price. New week opening gap above price on a Monday with relative equal highs. This is going to be a draw on liquidity. Or we're just going to continue and trade heavy, and then Tuesday is going to become a draw on liquidity. Notice this week was NFP week. NFP like didn't do anything at all. If we look at Friday, like the NFP candle was pretty much a normal candle in this delivery, which it still delivered. The wick was still like 100 points, which would normally be like a decent sized wick for NFP, but because we're so volatile, it really didn't do anything. So here we have relative equal highs, relative equal lows. What do we trade into first? Relative equal lows, come back up, and what are we doing? We're taking more buy side. Stop hunt here, trading lower, sell side, and now we're reaching that buy side. So since this week was NFP week, we had no red folder news on Monday. I forget what lecture this is in, but ICG talks about this. Yeah, you can ask me in Discord. I could probably find it. But if there's no hype impact news on a NFP week, there's probably going to be a setup during 8:50 macro, and 9:30 is more likely to expand into a target, and that's exactly what happened. At 9:30 open, traders are going to be like, okay, let's get in here. let's try to get something right off the bat. And if you're longing this off of open, you're getting torched. And that's exactly what happened this week. I just only want the 15-minute chart. And then we end up trading up higher. No 15-minute fair value gap. Like, this is a high resistance liquidity run. Coming back. This is all balanced. So therefore, if we want to trade below this, we're probably going to trade through that with speed, and that's what we got this week. And notice how this 1 hour inversion fair value gap is what we traded right into. And then PM session, consolidating all day, and PM session gets that expansion up into sell side imbalance. This was my terminus for the day. This is what I want to see for the rest of the day. And then into new week opening gap. And then look how we use new week opening gap constant encroachment here to then trade higher as well. And then Tuesday, we set up an Asia low here within an imbalance. And then we have previous day high here. Those are the two main focuses here. We don't really have any clear inefficiency higher. We do have this imbalance here. And then the next inefficiency after that is this. And this was kind of my focus in my daily review as well. This inefficiency likely going to be the draw on liquidity. And then we also have that 1 hour sell side imbalance as well, which is also the draw on liquidity. So we come up, but this is still all just a buy program. We're just retracing back into internal range liquidity to then take this high. I had this in my daily review as well, but if you study this inefficiency, constant encroach of that, look at how it's used here. High of that candle to then trade back down into this inefficiency. These series of down close candles. Look at it used here for the little London setup, and then also used here at 2 p.m. And then we take buy side, we're trading back lower. Sell side is tagged, and then displacement. This is just a retracement back lower into here, into this inefficiency. And then we get expansion higher up into our targets. And then here we have the following day. Same kind of thing. Same kind of market making principles. Generating liquidity during overnight sessions. Previous day high, rest here. Generating, consolidating, just trading lower, heavy. 1 hour buy side imbalance hit at new week opening gap during a time, 9:30 a.m. open. So then what do we get? Expansion. Just how fast this expansion is, we're already looking for a previous day high in these relative equal highs. Institutional order flow drill on the 15-minute chart. Trade up higher, consolidating. Failing to create a 15-minute fair value gap. Then once we do that, what do we use it? We use it as buy side imbalance. 15-minute order block. Also, look how daily SIBI constant encroachment was just used perfectly. That was ICT's draw on liquidity that he posted on Twitter. I was also looking for it as well. And then order block, expansion. You have old first presented fair value gap. And then notice this price action as well. Like, all of this is balanced, except for this inefficiency up here. And then you also have posted this in my daily review as well. Opening range gap. Trade into that volume imbalance, and then also clearing up these relative equal highs within that inefficiency. Trading lower, and then just huge sell off here. Thursday, what are we looking for? Possibly another trade lower or consolidation, or just simply staying out of the market like this week. There's nothing wrong with just staying out of this market. Huge volatility. I was done on Monday, and then I kind of just chilled for the rest of the week. Paper traded, got experience that way, and that's completely okay. So what do? We generate relative equal lows, trading back up higher. This is just beautiful delivery. What are we doing? We're just look at this, 15-minute no imbalance until we get near this inversion for fair value gap. Beautiful. Expansion lower, and then this is a 1 hour SIBI as well as a 15-minute SIBI. Notice how we hit it once here at 8 a.m. to trade lower, falling short of previous day low, to then trade back up higher into that one more time, taking buy side liquidity. ICT went over that in his Venom model. And then we're trading lower, sell side liquidity engaged. Okay, and then we're trading back up a little bit higher into this inversion for value gap to then trade lower. So although these days, like Thursday and Friday, aren't like trending like 9:30 open, we just trend lower. Like this, the price is expanding so much. Like just that is 250 points, 1,000 ticks, which is insane. And then here, get that pre-market, trading up higher, and using that as an inversion for value gap. Here, then trade lower, sell side imbalance, trading up into this institutional overflow entry drill, lower. And then yeah. So I do wanna pull up my 1 minute chart with like every fluctuation as well, and then also go over my like little eye training. So here, coming into the market Monday, I was looking for relative equal highs, London, clear draw and liquidity. But then before that, looking for daily sell side. If that daily sell side liquidity pool was it an entry that I was able to align myself with, trading lower. And then this was my live stream. I entered, off this fair value gap, looking for first presented fair value gap high. Beautiful trade there. But if we see, we have 2 sell side liquidity pools engaged. If this line here is, I forgot to mention this. I was gonna make it a point to reference it. But if we, ICT was also talking about this in his one of his lectures. Fulcrum high to low, and then you get targets here: negative 0.25, 0.5, negative 1, negative 1.5. And here we're hitting that negative 2.5, so that's what that black line is. And then here we have all further possible expansions. So we're hitting that here. Trading up higher, institutional overflow entry drill. Trading lower. Notice how we're kind of we're not displacing as much here. And then once we get a fair value gap, what do? We immediately trade back above that. And then a characteristic as well of a 930 Judah swing, which is just a fake out move, which we're trading opposing to where the daily range is going to go, is something like this, where we have no like retracement into first presented fair value gap, just straight distribution lower. And then as we know as well, we have buy side liquidity that clearly rests above here, a bunch of liquidity. So we're trading lower, intermediate term low now established, down close candle, order block, down close candle, order block, trading up higher into this. This is a nice entry point, and then trade up in here using this, and then using this, then trade up into first presented fair value gap high. Notice as well we have an old reference point of liquidity. An old reference point of liquidity right there. Trading is that perfectly. And then this is a 5-minute imbalance. And what is it as well? 3 consecutive down close candles. That opening price. Trading into that wick right there. Then we have a 1-minute imbalance, 5-minute imbalance. Then 1-minute imbalance here. Kind of consolidating to then go higher. This is not a consolidation. This is not using this midnight opening range to then trade lower, to then trade for this as sell side, but to use this as a discount right here. And then look at that 1 minute fair value gap, use with time, then trade up higher, relative equal highs here. Notice how we're hitting negative 1 midnight opening range there, trading back lower into this breaker. Also is a 30-second inversion for value gap. I believe that would be considered a Reaper, but I haven't really studied the Reaper that much. Don't quote me on that. So then trade higher, trade back lower in midnight opening range, and then continue higher. This, we are getting consolidation, and then PM session we expand. ES hits new week opening gap. I said this in my review. ES hits new week opening gap, constant perfectly there at 2 p.m. Trade up higher, entry here, and then we kind of just fizzle out for the rest of the close. Here, what do? We expand higher. Buy side, buy side, buy side. Oh, like, look at this. Higher high, higher high, higher high, higher high, higher high. No expansion here. This is just taking, okay, short traders are getting engaged here, then they're getting stopped. They're engaging here, then they're getting stopped. Or they're engaging here on a breakout or something like that. They're engaging here, and then they're getting stopped. They're engaging here, they're getting stopped. So right now, during Asia session, what do we kind of have, like, with a narrative? We know that, okay, Short traders are getting toasted. We've kind of used up all this buy side liquidity. I wouldn't want to see this getting targeted. So then we want to wait. We want to see during time. 650 macro. We have sell side that rests here. This creates a buying or selling opportunity within this inversion for value gap right there. And then we trade lower. New week opening gap high used here to then trade lower. And then London session. This is when we use that inversion for value gap right there with this buy side imbalance during 3:30 to then have another expansion, and then we just get a huge sell off. 650 or 550 macro. 650 macro and 550 macro this week got used a lot to send these moves lower. New week opening gap hit, and this is kind of what was really the bread and butter. We have 10 a.m. news, but we have 10 a.m. news Tuesday and then Thursday, I believe. Yeah, Tuesday and Thursday, and both of those times, first presented for value gap is huge for that news delivery. Notice here, no first presented for value gap. Then we get it here. Using that, boom. Opening range, constant encroachment. Opening range gap, constant encroachment. That's this black line. Then trade lower into sell side liquidity, into Asia liquidity, and then into that 15-minute buy side imbalance, into this old 15-minute sell side imbalance that was used here. And then we get that buy side delivery. Smart money reversal. Smart money reversal. Trading up higher. Buy side liquidity. Another little Asia setup here. Trading it back lower into relative equal lows. Into new day opening gap. Another 650, 550 macro used here. Trading lower. Spooling. New week opening gap hit. 1 hour buy side imbalance. Expansion. Buy side imbalance reaccumulation. Buy side imbalance here after having a buy stops triggered, then coming back, sell side triggered, new day opening gap, then we consolidate, trading up higher here, 15-minute fair value gap that we went over, 3 consecutive down close candles, trading up higher, propulsion, another propulsion, look at order flow supporting that, and then here is the first presented lunch fair value gap, use that to then trade higher, order block, propulsion, buy side imbalance here, trading up higher, buy side imbalance here within first presented for value gap. We have projections on lunch opening range and then AM session opening range, failing to trade into this old liquidity reference point. Then what do we get? We get change state delivery, sell side imbalance, heavy, redistribution, best left open. What is this? An array that sent price higher. It's going to be used as premium now. 2 consecutive candles. We have a little wick. This is a stop hunt. It's also created SMT. Then we trade lower. Sell side imbalance with an old first presented for value gap with previous day high. This was previous day high. So there's a lot of significance around this. This is going to be a reference point used for order flow. Look how it's used here, accumulating around that. They're able to put orders in around this. There's a lot of interest around that for large funds to trade around this level. Then it trades lower, displacement through that, used again here to then trade lower until lunch sell side liquidity. Then it's used again here with the SIBI to then trade lower into opening range gap high, used here. Okay, we have relative equal lows here. Expansion, coming back down, buy side imbalance, we're respecting discount raise. Buy side imbalance here. Order block. Expansion into equal highs. Notice that wick was the stop hunt, which was the SMT, which has a large wick. That's used and recapitalized off that liquidity. Then look what else we have. Old first presented fair value gap. And then look at that old high used again here. Old high, previous day high with a old first presented fair value gap. That's probably not useful anymore at all. And we trade up higher. This is during Trump's speech. I went to the gym during this time. I went to the gym. And so for my Forex Factory, I thought Trump was speaking at 2 p.m. that day because I had it on Mountain Time, which is my time that I use. And so I went to the gym. I come back, and I thought he spoke at 2. And then I go to the gym and come back, and I'm like, bro, what? When I look at the charts. Because I thought he spoke at 2. That was just like an error on my part. So when we trade up into an old first presented fair value gap, into old new week opening gap, into an old daily high reference point, into an old, all this clustering of fair value for the algorithm, and we have a random sell side imbalance that just somehow sends price lower here with huge displacement. And then we have a 4/1 first presented fair value gap used there to then send price lower. And then we have a gap lower. And then again here we have that previous day low. Trade back up higher, generating relative equal lows. Then trade higher. Get that 1 hour inversion fair value gap here. This as well. First presented fair value gap. Yes, trades in the first presented fair value gap right here. First presented fair value gap. Boom. 10 a.m. news again. How is first presented fair value gap being used as a premium array? Trading lower. Another, this is a 30-second imbalance. Then we have a 1-minute imbalance. Using that perfectly to then trade lower. Sell side. That fulcrum on the daily chart. And then you have 4/2 previous day low that still hasn't been delivered into. Beautiful draw. Trade up higher. Inversion fair value gap hit. Displacement. Fair value gap. Inversion fair value gap here. Hit again there. First PM session fair value gap. And then we just trade lower. And then Friday. Kind of pretty similar. 650 macro used to trade price lower. We're compressing. Look how new day opening gap is used. And then we're trading lower. 1 hour or 15-minute SIBI, which is part of a 1 hour SIBI. Excuse me. And then we trade lower. Opening range, trade up. ES trades into first presented fair value gap right here. That's why we're wicking outside of this, using this as constant encroachment. This is a deep retracement, but for ES, we're trading into first presented. Then we trade lower, inversion for value gap, inversion for value gap, SIBI on the 5-minute with initial sell side. And then we trade below that, immediate expansion out of that. 2 consecutive down close candles. We don't trade into that, but then we recapitalize on these down close candles, trade up higher, buy set and balance into half of opening range. Opening range, first 30 minutes, half of that range. Trading lower, balance price range here. We don't need to trade back up into that, but we're trading up into opening range low. Order block, inversion for value gap, and then trading lower. A negative 1.5 AM standard deviation, opening range. And then we have sell side liquidity here, AM session sell side liquidity. Rejection block in the 5-minute, trading up higher. There's no entry here, but we're just trading up higher into lunch first presented for value gap, also into these inefficiencies. Then we break lower, fair value gap, SIBI, short, constant encroachment, short, sell side amount, short, negative 1.5 fulcrum, perfectly respected. 250 macro provides a reversal, trading up higher, coming back down to last inefficiency. Also this, we don't use this, and then this order block gets recapitalized there. Inversion for value gap, trading up higher. Oh, it's going to sell off here. No, we're still in a buy program. Trade up higher. Lunch opening range low, traded into here. Look at that right here, that reference point used there. Opening range high for PM session, traded into there. And then also, I forgot to mention, 0.25 of this high to low used there. And what do we get? Failing to trade above this 5-minute SIBI. Expansion lower using this SIBI. Institutional overflow entry draw. Notice where do we get that? At these consecutive up close candles, we're using that wick. Then trade lower. And then here we have, if you take lunch 11:30 to 1:30, you get negative 2.5. That's exactly what we end up hitting right there perfectly. So yeah, that was the week. So many setups, so much opportunity, and kind of like my weekly focus for the next week is just to stay low. Don't expect too much on yourself. Look for 3 setups maybe for that week, and then just be done. Be content with that. Sit to the sidelines and just be cool with that. Look for 1 hour inefficiencies on the weekly chart, and then those probably get used as areas that you want to be looking for and keying up if that's happening during a macro. And yeah, that's my weekly review. Hopefully you'll have a good rest of your week, and I'll see you guys Monday if I live stream, which I'll be live streaming Monday.